Good evening. Let's do a end of day review today. So today is the Monday, July 24, 2023. It's the first trading day of the week, and this week is loaded with high impact news. Like this morning we mentioned the FOMC meeting on Tuesday, which is tomorrow, and Wednesday. The chairman will have a conference, the meeting, and then also on Thursday we have a GDP number gonna be released. So we expect lots of volatile volatility for this week. All right, let's go to the view today to see what kind of setup we mix or we should have in take a trade. Just quick remind that we have the rule of engagement, so we only engage on Thursday and Friday. The reason behind that, because we believe that after Wednesday and Tuesday we will know the high and the low of the week. Similar to the DR concept, after 10:30 we will know the high and the low of the day, so that gives us a level to working when we involve. So if we take one trade of the week, why don't we wait? We wait for the market to show its hands, and then we can get engaged. So that's the basic reason behind our rule right there. So for today, when we first look of at the price action on 1 hour time frame, we thought it's gonna be at first it looked like it's gonna be bullish, and then after that it looked like gonna be a bearish, and then it come back bullish, but then it stay right there. So it's Monday is a range day right there, basically a range day, especially for the big week like this week. So we expect it's a range day. You see right here, right? You just see right there, right? At first it bumped all the way there. We said, wow, it's a bullish signal, right? Buy seller liquidity taken, and then it make a huge gap right here and retest, and it's gonna go up, right? And it's gonna break this bearish breaker, and it can go up. But actually it did not do that. It's still close below this bearish breaker right there. So it's going consolidation right there at the key level right here. So we have to wait until Tuesday and Wednesday to see how it play out. But our key level on high time frame is the order block from weekly time frame from December 20 last year. So in order to be bullish, but also you have to stay at a level. And also we remember this is the last week of July, and we don't anticipate major move on the last week of the month. Let's see, that's our belief right there, but market always surprise, right? So we have to monitor and see how the price action taking place, and give us some opportunity right there. So basically at first we thought it's gonna be huge, go up and then go down. That's on a 1 hour time frame right there. Let's look at the 4 hour time frame. Yeah, for some reason we want to pay attention to the candle open at 9 o'clock, right? On 4 hour time frame. Nine and 13. Yeah, you see the Monday, all the Monday, the 9-hour candle, it up close. So next each day, if it up close above that, then we expect a moving up. You see right there, the up close. And the Tuesday, if it's close above that Monday, then we expect it going up on that Tuesday at least. However, right here we see it's up close, but the Tuesday, we don't have Tuesday, but the Wednesday is kind of, you know, close below that. Then we expect the down wick right there. See that there? So it looked like we have to wait for Tuesday to see how the 9 o'clock candle for, you know, on 4 time frame, how it's open compared to today. Give us some clues. That's that thing we want to point out real quick right there. Okay, now go back to the 1 minute time frame. So actually we have a very nice setup, but we don't have the experience or conviction to take this trade. But if we have a conviction strong enough, we can take that trade right here. You see, you can treat this as order block, and you see the fair value gap right there. It break through there, and then it go back and retest this, right? You take 1, right, 2, right, retest 3, and retest 4, and then it go up, and then it's just a retracement, and it keep going up. And our target going to be the buy sell liquidity here, and it hit that buy sell liquidity at 11:15 right there. Yeah. Let's see what's going on. Let's see why I cannot move this. Are we on it? Yeah, right here. I put right here. 15. Yeah, we can see that the buy side liquidity taken, so we can engage long right there. We will go back and retest them. Right. You can see the same setup on the 5 minute right here. Sell side liquidity taken. Order block right here, fair gap, retest 1, retest 2. We can entry right here at 9:55, which is the time of interest, or also entry at 10:05. So we have 2 time to entry there for this order block retest. Okay, so that's one I set up right there. So right here we see is the London section. It take out the high of the London, which is the buy sell liquidity taken, right? But it did not check the sell side liquidity of London, so it's a fail. It failed to check the sell side liquidity. So basically it's a bullish momentum right there. Okay, let's take a screenshot this one. So we annotate this with this setup. Let me see. Here, that's the second entry. we're gonna say right here, we call this setup is, what do you call that? We call that a auto block, right? Whenever we do auto block lookup, it's a reversal setup, so it's more risky, but the risk reward is very good. So let me see, retest, and this is going to be a long setup, and we did have the self-quality rate. And then we have what, a buy side liquidity rate also, and then we have so-called a higher low. You see, this is a higher low on the, in terms of, you know, retest auto block. That's our setup right there. And entry time, you can entry as 0950 or 1105. I mean 1005. That is how I do it. Our target's gonna be buy side liquidity. At 15. Or look at exit time is 15 right there. That's the setup that we have should identify in real time. Alright, let's take off this, check inside of this, and put into our journal. Conservatively, we can target at this error, right? At this, open this, we still have. Yep, that's the one I set up. Alright, the second setup we want to talking about is this setup right here. This one is the confluence between ICC concept, DR model, and also turtle soup, right? Okay, right here you have an auto block right here, a bullish auto block. It go up, take buy side liquidity, and then it come here, it retests this auto block again, and after that it create a huge parallel gap, and it come back one more time, the third time, and retest at 11:35, which is a time is trick for turtle soup right there, and it kept going up. And if that's for turtle, and also for the R model said that after 9:30, after 10:30, right here 10:30, we know what the high of the day, of the low of the day, right? So right here at 10:30, we still don't know. Yes, we want the validation, and right here this candle validate that it closed above the implied DR, and then another candle show up. So this is just a pullback right there according to the R model, so you can enter right here. Okay, that's how we see things right there. You see right there? Okay, let's see. think I did check a screenshot of that. So let's retake this screenshot so we know the setup right there. So what we call this setup right here, right? It's gonna be the ICT concept. Confluent with VR model, and also confluent with the Telesub. And this is a long setup. And we have a buy-side liquidity rate. Right here, we have buy-side liquidity rate, and it retests the order block twice. 1, 2. Right. Retest twice. And the second it retests at 11:35. And then that our entry is gonna be at that time. And where our stop loss? Our stop loss will be at the DR range right there, the mid range of DR, the midpoint of DR. The stop loss is the DR mid right there, and our target in this case is the DR 0.5 standard deviation, which is this one, and it did reach at that. So for the DR model, the low hanging fruit, especially for Monday, is range there. You don't expect much, right? So it's a low hanging fruit is the 0.5 standard deviation. It's a very high, properly target force right there. So basically that is right here, our target right there, our entry right here. And the order block that we pay attention is at this order block, or also this order block. So we have two order block right there. I think ICT calls proportion block for the second one right here. Yeah, so this is a confluent of three model right there: ICT concept, DR model, and the Telesub setup model right there. Basically, the Telesub tell you that it's test, and it looked like gonna break, but it did not break down. It's just a fake or a failed breakdown in this case, so you can go long. But the other way around, it would be a failed breakout. It's gonna go down. Okay, so that's for the idea of the Telesub right there. But like we are anticipate Monday, especially for a loaded high impact news week, Monday onward be a tricky. The same for Tuesday, and so that's the reason why we see how the price action behave this way. But anyway, we learned a lot of things today. At least we learned two setup right there. Okay, that two setup we can see real quick right there. Right, the setup right here, and also setup right here. Okay, the third setup we do is right here, the short setup. We have order block and failure gap or failure gap, implied failure gap, and then the retest right here. So our entry is going to be 2:25 p.m. or 14:25 is the short setup right there, retest right there. And our target is going to be this liquidity right here. We see the loss of liquidity right here, the sell-side liquidity. Or if according to the R model, you can put your target at the midpoint right here. So it's the short setup right there. Let's look how it looks like on the 1 minute time frame. Yeah, here's a look like a 1 minute time frame. You have a big order block right here, right? The breakdown, the fellow gap, and then a retest right here. So it's also your entry is gonna be this. By the way, what's the level of 455? Why is that level right there? I don't know why the level at 455 come from. We forgot. How do we come up with a level? You just touch that level. That's amazing right there. Let us recall where we get that level. Is that on the 1 hour time frame, or is on a 4 hour time frame? Wow, amazing. Okay, let's see on the 15-minute time frame. Wow, we got that level. Wow, here. Let me see how we get that level. It's a mystery to us. What did we do this morning? That's amazing. Oh, it's just the DR standard deviation. I see it now. We come with the level because that's the DR model 015 standard deviation right there. So that right there, that's where we got that. Okay, so we're good now. So basically we can go with 5-minute time frame, right, with the DR model in this case. So it's read that, so our entry is gonna be here. Okay, let's check a swing shot of this. Because we believe that when it check the buy sell liquidity, it's gonna retrace. It make a retracement, right? And our target, what our axis? Okay, let me get this time. So I'm gonna duplicate it. 15:25. That's our exit time right there. Alright, let's log this trade into our database. So what trade we're gonna say right here is order block, fair value gap, retest, and a long setup. Right, it also the DR model. Okay. DR model in the sense that it reached one standard deviation and it will not go all the way down here. It may go back to the mid range that will help us to define our targets. And that's okay. We say DR model, and this is a short setup. And what do we see from this? We see a buy sell liquidity were taken right here. This buy sell were taken. And then what is our entry? Sorry, I have to put entry here so we know what's our entry right there. Okay, now let's try again. So what we call this again is order block. Fair value gap. In this case, it's not really a real fair value gap, it's just implied fair value gap retest. And then it's the confluence with the DR model in terms of how we define our targets. And then this is a short setup first. And the condition for this in terms of liquidity, we saw a buy side liquidity were taken, right? 14, right? And then the entry time is 14:25. It's not a perfect time entry, but anyway, that's what we observe. And our target gonna be buy side liquidity, sell liquidity as 453.74, which is elite level. This level very key. You see lots of sell liquidity, so you're gonna take that. And or the midpoint right here, right, or the DR mid, okay, oxide DRM for mid right there. And X6 time gonna be 15:25. Wow, it's an hour right there. Stay in the trade for an hour. Okay. See, so that's the buy sell liquidity was taken right there. Buy sell liquidity taken. So give us a signal to engage. All right. Let's lock that file. The trade. So that is a short setup first, right? On the block. We log into our database on M5. Okay, I think one thing we only have 1 more week. One thing we want to point out real quick that the volume for today on right here, you see the volume for today is 71 million share. Is still below the average 60-day, but however it's 1 million share above the last Friday. Last Friday is about 70 million share. So and however this morning the pre-market, I want to show you, we keep track of this right here. The pre-market volume become low, only 360 something, is half of the volume of last Friday right there. So that's in terms of the volume we see. But anyway, I think that's it for today, for the end of day review for Monday. And bye for now, and good night and good luck.